So we'd have done the trial balance question. I hope you had a chance to look at that one. We did that is a video before this one. And of course, from the trial balance stage, which is the check arithmetic stage, we then move on to the closing financial statements. And those are the TP&L, trading profit and loss account, otherwise called the income statement, and the statement of financial position, otherwise known as the balance sheet. All right. And for those who have not taught before, you can always pause the video, take a screenshot right here of the importance and the use of both of them. We know they do the TP&L first because you will need the net profit or net loss to then carry over to the balance sheet. All right. So these are two very important financial statements. I will do another video teaching all of these, but let's just move forward with answering the question because that is the purpose of this video now. All right, so here goes. And the first thing we do, of course, is to write the name of the account. It's G Browns. Let me get my spotlight so you can follow me. All right, so G Browns trading and profit and loss account. We could say income statement account if you want, and you must say for the year ending 31 December 2023, capital D for December. All right, so up here now, the first thing we should have here is details. Why am I writing the wrong thing? Details, dollar sign, dollar sign. And now we're ready to go. The first item, and we're going to tick them off, the items that go into the trading and profit and loss account. So opening stock, all our expenses, purchases, sales, expenses again. So all of these items would go into our TP&L account. Anything that has assets, liability, and capital, those go to the balance sheet. So and don't forget your footnotes. Your closing stock is very important. All right. So let's do this in 10 minutes or less than 10 minutes. So let's go. The first thing is sales, your total revenue. All right. And the total revenue that we have is 378,860. So write that down. 378,860. Let me just format here quickly so we can move faster. All right. There's no return inwards. Normally you'd have less return inwards, then you get your net sales. All right, but there's none of that. So we'll stick with the sales. So we're going on now to our cost of goods sold. And of course, your cost of goods sold, we're going to subtract that from your sales. Listen it, cost of goods sold. The goods you sold are your sales. What's the cost of the goods that you sold? In other words, your cost of goods sold is your cost price. So sales subtract cost price. So in other words, you can always write this here, less cost of goods sold. You don't need to, but just so you remember that you're going to subtract your cost of goods sold in the format. All right. So to find the cost of goods sold, it is first, it's a very long formula, but well, not very long, very easy. But in this question, we don't have everything. So opening stock, add purchases, and so on. Here we have opening stock. So our opening stock was 41,600. So we write that there, 41,600. Then we add purchases. Did we buy any additional stock that we need? Of course we did, because whatever was left from last year, which is our opening stock, could not suffice to run the entire period. So we had to purchase more stock. So therefore the purchases figure was 188,720. All right. And then we're going to subtract our closing stock. We don't have any carriage inwards or return outwards, so we'll leave that for now because this is a fairly straightforward question, a simplified balance sheet, TP&L. The balance sheet is also simplified. So now we're going to subtract our closing stock. So we're going to write less closing stock. And our closing stock, there in the footnote, is 44,780. All right. And when we compute, we're going to add 41. This should be 41,600. And we add 188,720 minus closing stock. The figure we should get should be 185,000. 540. All right, and this figure is our cost of goods sold figure. As I explained, it is the same thing basically as your cost price. All right. We could have placed another figure between opening stock and purchases when we add them up and call that cost of goods available for sale. All right. All right. So let's subtract this now. So this figure here is the amount for our cost of goods sold. All right. And we subtract that from our sales. And if it's less, it's a gross profit. If it was more, it would be a gross loss. So we know we have a gross profit thus far. So gross profit. And the gross profit amount, subtract that 185 from the 378,000, we should get 193,320. Right? I want to keep these figures that are important in bold. All right. Now we need all our expenses. So less expenses. I'm going to list all of the expenses there. So we have 1, 2, 3, 4. Let's just write them down in the order we see them. So we have transportation. The next one we are seeing is salary and wages. The other, we have rent. Then we have insurance. We have motor expenses. We have office expenses. We have lighting and heating expenses. And we have general expenses. And so those are the expenses that we have. So let's go. Oh, this was motor expenses, salary and wages. Let's add and wages there. All right. So let's put the figures in now. So for transportation, 2,100. Just put in our figures, 61,400 for rent. Am I not finding my rent figure? Oh, here it is, 3,700. 3,700. I don't know what happened a while ago with my eyes. And then for insurance, we had 1,356. We go down to motor expenses now. We have 1,910 for office, 412, 412 for lighting and heating, 894, and for general expenses we have 245. So that is 1, 2, 3, 4, 5, 6, 7, 8. 8 expenses. And now we're going to compute. All right, so let's go. We add up all of these. Right, we should get a total now of $72,017. And this is our total expenses. Our expenses, we're going to subtract. So of course, of course, in accounts, we use a bracket for subtraction. And we subtract. And we're going to subtract that from the gross profit of 193,320. And that should give us 121,303. The fact that this figure is greater, well, the fact that the gross profit is greater than our total expenses, it means that it is actually a net profit. If the total expenses were greater than the gross profit, what we would have would be a net loss. And of course, now what we have to do is to draw our double line. So give me a second with that.